The energy transition is driving the demand for battery materials to new heights. Countries are racing to secure their supply chains for these critical resources. But commodity futures markets have not evolved with these new demands. Our solution? Abaxx Commodity Futures Exchange and Clearinghouse, a fully regulated global market for new commodity benchmarks, launching physically deliverable futures contracts for battery materials, using smarter technology to manage market pricing and counterparty risk, all while bringing a new level of transparency to transition energies. Real pricing, better transparency, smarter markets. Abaxx Exchange, now open.
Hello and welcome to Abaxx's Battery Materials webinar. I'm Dave Greeley, Chief Economist at Abaxx Technologies. I'm joined today by my colleagues from the leadership team at Abaxx Exchange and Clearinghouse in Singapore, Nancy Sea, CEO, Dan McElduff, President, Joe Rea, our Chief Commercial Officer, and Sasha Lifshitz, our Head of Battery Materials. Together, we're going to review our current product suite of physically deliverable battery materials futures contracts, including nickel sulfate Singapore futures and 3 regional lithium carbonate futures contracts deliverable in Singapore, Rotterdam, and Baltimore. We're going to inform you of the steps that you can take to trade these markets and answer any of your questions, which you can submit using the Q&A feature on the control toolbar on your screen at any time. So let's get started. At Abaxx, our mission is to build smarter markets. Those are markets empowered by better financial technology and market infrastructure to address our biggest challenges, including the energy transition. To that end, we launched Abaxx Exchange and Clearing, a Singapore-based but global commodity futures exchange and clearinghouse, recognized and regulated by the Monetary Authority of Singapore as an RMO and ACH. And at Abaxx Exchange and Clearinghouse, we've introduced centrally cleared, physically deliverable commodity futures and derivatives in nickel sulfate and lithium carbonate to provide you with better price discovery and risk management tools. Each of these products are the results of years of our team working with commercial market participants like you to build products that best meet the market's commercial needs, and we expect that our futures contracts and our product slate will continue to evolve over time as the needs of the market evolve. We've built a team of experienced industry veterans drawn from leading global exchanges, including NYMEX, CME, and SGX, as well as the commodity trading desks of the leading investment banks and natural resource companies, including Goldman Sachs and BP. This team is backed by a group of strategic advisors who are deeply experienced market practitioners who spent careers trading and running trading desks who advise us on the development of new futures contracts and markets. They bring us their experience from companies like Poten & Partners, JP Morgan, Glencore, and more. But let's get into the specifics, and for that, I'll hand it over to Dan and Sasha to introduce you to our physically deliverable battery materials contracts, after which Joe and Nancy will discuss the next steps you'll need to take to trade these markets. So let me turn it over to you, Dan.
Thank you, David. So at Abaxx, we have delivered a solution, a comprehensive solution that includes trading forms for futures and options. Our platform allows for 2 work streams where you could submit your OTC trades to us in the form of blocks or EFRPs, or you could submit your orders into our central limit order book and have them matched anonymously on a price time priority basis. An extension of our services is our own clearinghouse, which provides a range of settlement and delivery services for our contracts. And it provides us with flexibility of offering as wide a range product offering as we would like, with some flexibility and with a great deal of flexibility and scalability. The services that extend from those 2 core pieces, exchange and clearing, are services to subscribe to market data, to help with straight-through processing, and to support analytics, and services that allow trading firms and clearing firms and broker firms to to manage permissions for trade entry for OTC trades and to manage risk accordingly. And that trade entry, particularly, we call out EFP trading as an important thing. We have a deep belief in the benefits of physically delivered futures contracts. And so far, all the contracts we've listed call for physical delivery, though we will present and list additional contracts that are complementary to our core products that are financially settled. But in any case, when the futures contract doesn't meet your requirements identically, then EFPs or exchange of futures for physicals are a great tool for parties who want to use futures contracts to hedge, but convert their positions into physical deals with their traditional bilateral counterparts. And we put a lot of focus on EFP trading and support for that. The infrastructure that we do this all on it's cloud native, open and modular. It allows us to, as I said before, introduce new product and scale up the products that we have. And to date, we have listed 9 futures contracts, 3 in LNG, 4 in battery metals, and we'll get into greater detail on that. And we also have a suite of environmental products, and that suite of products is going to grow. We're always looking for feedback from our community on what solutions they need in their portfolio. And but again, this is really focused. This discussion is focused on our battery materials, and our in-house expert on that is Sasha Lifshitz, and we're going to progress, and he can provide more details on those contracts.
Thank you, Dan. Hello, everybody. It's a pleasure to talk to you and introduce you to the details of our suite of battery materials products, which we've developed together with the industry over the last 2 years. Generally, both contracts, the lithium carbonate contract and the nickel sulfate contract, are designed exactly the same way. So the base structure is the same. And there's a couple of benefits for the market and you as participants in this market, where we're creating better price points, being more reflective with these products which we're designing to meet the current needs of an increasingly dynamic market and market environment. Both contracts are designed for physical traders, for physical producers, for consumers, and for the financial trade industry alike. They can be used for hedging, for risk management, and for arbitrage. And ultimately, our contracts act as buyer and seller of last resort based on the fact that they're all physically deliverable. Those contracts not only just provide price discovery and a reliable benchmark and transparent benchmark for the industry, but they also bring benefits for the financing industry, for the whole supply chain planning of participants, and also allow for long-term contracting a suitable benchmark. Happy to go a little bit into the details of the lithium carbonate and nickel sulfate specifications. So starting with the lithium carbonate contract, it is a battery-grade lithium carbonate. The contract size is 1 metric ton. And whenever you go to delivery, as it is physically deliverable, the multiples and minimum sales quantity will be 20 metric tons. It's a US dollar denominated contract with a tick size of $1 and a minimum price fluctuation of $1 per contract. We've designed the contract in a way that we're going to start with 12 consecutive monthly contracts, but these can be extended as liquidity increases, and also in the case, for instance, of bringing a block trade onto the platform, we can do that and create longer dated contracts. Initial contract for lithium carbonate is May, the contract delivery, and we've started, as most of you might know, in the beginning of March with our first trades. One very important feature of our contract is the delivery term is DAP as per Incoterms. So we're not using a warehouse system. We're using delivered at place, which most of you, I'm sure, are familiar with, where we're matching buyers and sellers at destination. We have 3 destinations, as already mentioned. We have 3 individual contracts for those destinations, 1 for Baltimore, 1 for Rotterdam, and 1 for Singapore. The details can be found in our exchange rulebook for further clarity on those topics. One additional feature maybe of the contract to mention is we have 1 monthly delivery date, which is the 3rd Wednesday of the month. So the last trading day is 2 days before that prompt date. So you have the possibility to trade every day. We have a daily settlement price, which will allow you to work out benchmarks, monthly averages, weekly average, spot pricing activity as it suits your trading book or your price risk management requirements. Moving over to nickel sulfate. So as I've already said, the main design of those contracts is identical. So the contract structure, what I've already mentioned, monthly contracts, DAP, prompt date 3rd Wednesday, 1 delivery per month is exactly the same. The difference, which I would like to point out here, is this is a nickel unit contract. So you're trading 5 metric tons of nickel contained. And this allows you to really use this contract also as a benchmark for any other nickel unit. So pretty much like, for instance, you use a metal contract on the LME for pricing intermediate products like nickel pig iron on MHP or ferronickel, whatever the case might be, concentrates as well. This contract, only when you go to physical delivery, obviously the product is nickel sulfide, but other than that, you can use this benchmark to price any other nickel unit and work off your premiums and discounts alike. The same applies actually, obviously, to lithium carbonate as well. Just to basically, to quickly go back to that contract, it's also you're trading lithium equivalents, and whenever you want to price a hydroxide or a spodumene, you can still use that as a benchmark and work off your discounts and add your premiums for the respective products. One feature to mention as well, and that goes for both contracts, is that we have listed brands. So whatever nickel sulfate units can be delivered through the contract or picked up if you're long, we have a rigorous brand listing process in place, and the producers can list their products, and then we will have maintain a list of eligible products which you can deliver. If you have any interest in understanding this product listing process, please let us know. We have a couple of ESG requirements which are in there, which is also important in the current environment. And same obviously applies also for lithium carbonate. So with this, I'm giving back the word to Nancy.
Yeah, thank you. So I'm going to bring you to the next steps in terms of how you can actually assess, trading on our Abaxx Exchange. So it's relatively simple, just a couple of steps, right? The first and most important one is really to have your clearing firm connectivity. So you can actually visit, our website under, the resource directory for a current list of clearing firms that has already been, onboarded and that can provide you access to our Abaxx market. So if it happen that, the clearing firm is not been listed, do feel free to connect them to Abaxx, and send your, inquiries as well as your requirements to our email at, sales@abaxx.exchange, so that we can actually help you to process as well as develop the necessary connectivity with your clearing firm. If you have that already, the next thing is that you can connect to us in two ways or trade with us in two ways. Direct access is via a block trade, and to do a block trade, you need to complete an onboarding process in the Abaxx trade registration platform called ATRP. And don't worry about that. We will basically help you and guide you through in terms of doing that process. And then the other one, you may be also wanting to trade, or you may trade through what we call, central limit order book, club trades. So in terms of that connectivities, we basically provide front-end connectivity via TT and CQG already. So again, request this via your clearing firm. Once you have that, and on the credit and limit setup, your clearing firm will be the one that will be hand-holding and to ensure the finalization and the completion of your account setup in order to get all the limits as well as position, credit and everything set up for you properly in the relevant, whether it's block trades or the club system in assessing and trading our Abaxx market. So in any case, this is, the few steps as a first guideline, right? If you have any questions and, and in terms of further information in terms of connectivities as well as the onboarding process, drop us an email at sales@abaxx.exchange. You can assure that, you will be hearing a response from us. So with that, what I'll do is I will hand that over to Dave.
Thanks, Nancy. So I wanted to take some time to make sure that we answer any questions you may have. Feel free to continue submitting questions using the Q&A feature on the toolbar on your screen, and we'll go through those. I'll hand them out to our various participants. I think maybe the first question here I'll direct to Sasha, and that's, can you describe the main difference between the LME model for metals futures and Abaxx futures?
Okay, the main difference between those two contracts on LME and Abaxx, just starting obviously with nickel. There is a nickel contract for nickel metal on the LME, and we have nickel sulfate. So the underlying product is different, and that's really, adding a product which we think or we see, evolving in demand with the increase in battery material technologies. So the underlying product is different. The second big difference between LME and Abaxx is certainly what I've already mentioned, is the delivery mechanism. So we're not maintaining a warehouse system around the globe. We have delivery on DAP, where we match buyers and sellers on the prompt date at a specific location. What comes with this is obviously that you're trading a specific location. So whereas you might get warrants on the DLME system in any location around the globe, in Abaxx, you trade a dedicated Singapore contract, you get material in Singapore. You trade a Baltimore contract, a short, and you'd have to deliver to Baltimore. So that's a very important additional feature. One of the main differences as well is we have one prompt date per month, as I've already mentioned, whereas LME has every single day material can be delivered and picked up. That's certainly very different. So we're concentrating liquidity in one prompt. What's also important, I think, is not only the differences but also similarities. So LME and Abaxx are both listing brands, so we want to make sure that the integrity of the product is in place when it changes from seller to buyer. So we have a very rigorous mechanism, first how we list the brands, and then also how the quality is ensured and that you get the quantity and quality at the right time in the right place.
Thanks, Sasha. And just a reminder, if you want to submit a question, feel free using the Q&A toolbar at the bottom of your screen. I think the next question would be good for Dan, and that is, what happens if a seller fails to deliver, Dan?
So we have a standard approach to delivery non-performance and dispute resolution across all our contracts. And effectively, what happens is the case is referred to a delivery committee who will assess the situation for the party on the other side of the failure to perform. We look for them to demonstrate reasonably incurred losses because of the performance failure. And within the rules, they would be eligible to receive compensation for those losses from the party who's failing to perform. And those losses would be supported by the clearing member and the clearing house if necessary. And any such cases, the dispute resolution part of that is if the delivery committee's findings are challenged by the parties, then we, in each of our contracts, we would refer such cases to the regional arbitration panel for final decisions. So the system of working through situations like that, getting all the parties involved in it and getting down to the bottom of the problem, it does have some flexibility, and historically it's consistent with some other places I've worked that have those kinds of provisions. It's usually the case the parties can work things out. And within that provision, there's the flexibility the parties could agree to do an alternative delivery procedure and take their obligations off the exchange. But that'd be mutually agreeable. So I reference that just so parties know there's flexibility. I think physical delivery participants in the bilateral OTC market will look to each other and supporting each other through challenges in delivery. And our contract has that flexibility, but of course, if it gets to a point of dispute, then we have those rules to resolve that through the delivery committee.
Thanks, Dan. I think the next question I'll direct to Sasha, and that is, what is the inspection process? Do you have third-party inspectors?
Actually, yes, we do have third-party inspectors, the list you can find on our homepage. The situation when third-party inspectors come into play are in the situation where a non-producer delivers a listed brand. So let's say one of the big trading companies has material from a producer. Whenever they go short and deliver physically against that short, they have to deliver a full set of documents, including producer original certificates of origin, analysis, and weight. And on top of that, to make sure that the material is really 100% intact, they have to get material inspected prior to shipment. So you need a prior pre-shipment inspection, and you need to weigh and assay the product alike. So for that, you need a third-party inspection company to effect those tasks. So that's when these companies come into play.
Thanks, Sasha. We have a couple of questions left, but if you'd like to get yours in one final time, you can use the Q&A feature on the toolbar. I think the next question I'll direct to Dan, which is, how will the daily settlement prices be determined?
Again, it's a standard process for us and consistent with practice in the industry. We've defined for each contract the settlement price period later in the trading session, where we collect information on trades and active bids and offers, which is the first point that we look to in establishing the curve each day, which we use for mark to market. And for markets that aren't so active, we'll look to keep prevailing spread relationships in the shape of the curve in place. We'll also poll OTC brokers who are obligated to share active quotes for block trades with us and helping to shape the curve. So primary thing is to use the data in our markets in the form of trades, bids, and offers. And for final settlement prices for contracts going to delivery, which would be the invoice price for contracts going to delivery, we'll always use the weighted average price for trades done during the settlement price period. And then we go through the waterfall for in the event there's no trades to look at standing bids and offers in the market.
Thanks, Dan. And I'll direct the last question to Sasha. How would you compare your contracts to those offered by CME and recently announced by ICE?
I would say the main difference is really that our contract is a physically deliverable contract, where the other contracts by ICE and CME are cash settled. So you have a buyer and seller of last resort, instead of just closing your position and getting a cash differential between the purchase and sales price, or vice versa. You have the option on top of that to deliver a product or get delivery of product. And I think in this increasingly volatile and uncertain market environment we're facing, having the chance, in the case of being squeezed, to deliver material or pick up material adds a very important feature for risk management purposes of the industry. So this, I would say, is really the main difference. The price determination obviously is also between a buyer and seller directly involved on the contract, whereas the cash settled contracts use indices like from fast markets or for benchmark minerals respectively, and this is basically PRA determined pricing mechanism, where we think that having buyers and sellers on an exchange determining the price creates, in our view, an optimal price point.
Okay, thanks, Sasha. And we've got one more question that's come in. Guess this could go to either Sasha or Dan. I'll let you guys choose. It's jump ball. Why are you not using prices of recognized price reporting agencies, or PRAs?
Happy to take that one. As Sasha just explained, the differences in contracts. For cash settled contracts, you need a reference price, which you traditionally would get from a PRA. For those on the call who don't know what a PRA is, a price reporting agency, like Fast Markets, Benchmark Minerals, Platts in the oil industry. Those we think are, I said earlier in the call that we're focused on physically delivered contracts, which we think offer the best opportunity for price discovery. And in physically delivered contracts, because the parties that hold a contract to maturity are going to delivery, that represents a true physical contract, which is what the PRAs are assessing, right? So PRAs are traditionally press-oriented organizations that would call around and survey people on what transactions they may have done. In a case of a physically delivered futures contract, it's a transaction that's done, that's verifiable in a regulated environment, and a transparent one where everybody can see the trades happening. So that process of price discovery ensures that the forward market converges with the spot market, because at the time of maturity, our contracts will reflect the details of a typical spot contract. And so there is no need to use PRA prices, because the market is generating the price itself, whatever, through trades, bids, and offers that are happening in that futures contract. We'll look to different price references to evaluate that our contract pricing is in line from a surveillance perspective. But the core of what we do is allow the market to discover price. So anybody who's trading in the market to get their bids and offers and trades in there, which are going to be representative of fair value, because they're willing to trade at those prices.
Thanks, Dan, and thanks everyone for submitting questions. I think we've made our way through the list. So would like to thank you all for joining us today. We look forward to working with you to begin your trading on these battery materials futures contracts. As Nancy said earlier, if you have further questions or would like more information on connecting with Abaxx, please feel free to reach out to us personally or email us at sales@abaxx.exchange. Thank you very much for your time today, and we'll look forward to talking with you soon.